All right, here we go. We are officially live. I'm gonna give it a minute, let people get in here. I'm sorry I'm late today. Had to finish up a couple of things, but we are here, and it's time to do the market open. Smash the first like button. Vincent, what's up? Sasky, Philip, what's up? What's up? Again, sorry I'm late. Had to finish out a couple of things, but we are here. Good morning. Did you sell a lot of SoFi and pounds yesterday? I got the notification on SoFi. No, I didn't sell SoFi and Palantir. Or I don't think I sold SoFi and Palantir. I think I had, if on my SoFi account, I had like one SoFi share that I sold, and I had like 5 Palantir shares that I sold to free up some cash. But not really. So my SoFi account has like $500, which is why that might have happened. Aaron, Uriel, Kane, Investor, Lars, UC, Edwin, Jason, Paul, SJ, Sanjay, Seth, Roth. What's up? What's up? What's up? Here we go. Happy Paddy's Day from Ireland. Yo, I forgot my cousin's birthday in India was born on St. Patrick's Day, and his birthday is like now. I just realized, I was like, oh yeah, he was born on St. Patrick's Day. I think he's like 14 years old today. All right, here we go. LOL, sell Palantir. We never sell. Felicia, what's up? No, the thing is, on my SoFi account, I wanted to, I had like $500 and I wanted to put it into DNA. And so I had like 5 or 6 Palantir shares, like one SoFi share. It's like, all right, I'm just going to like get rid of all this, put it into one stock. I think I told you guys I was doing this yesterday on my DNA stock. I was like, all right, let's see if we can double this money now. I did buy a decent amount of cash secured puts on SoFi yesterday, or sell. I sold. Not buy. I sold. Nyan, morning from the West Coast. What's up? Chris Clark, hello. I made a decision in 2021 to not sell my long-term plays of Palantir for at least 5 years, 3 more years to go. You might have to wait longer than 3 years. It depends on how long it'll come up. Okay, here we go. So we've got a lot of interesting stuff to talk about. We have got Credit Suisse, which is the hottest thing that's going on right now. That is essentially getting billions of dollars of, I guess you could call it, saving of salvation. They are shares are up 20% on Swiss National Bank loan announcements. They're getting $54 billion. So Credit Suisse shares rose over 30% at the market open. It comes after shares of Credit Suisse plunged to an all-time low on Wednesday. The Swiss National Bank and Swiss Financial Market Supervisor Authority said that they beat the capital liquidity requirements imposed on systematically important banks. So the bank is not going to die, apparently, because it's being saved. They're borrowing up to 50 billion Swiss francs from the Swiss National Bank. Swiss listed stocks rallies cooled slightly in early trading. Now, this is really interesting, right? Because yesterday we were all kind of like, what's going to happen? This is one of those banks, Credit Suisse, that is such a, I guess you could call it an important financial institution because it's been around for so long that you wouldn't imagine them being able to fail. And they just proved that they're not going to be able to fail. Saudi National Bank took a 9.9% stake in Credit Suisse as part of the lender's $4.2 billion capital raise. They were not going to give them any more money. And because they were not going to give them any more money, that's where most people thought that something was wrong internally with their finances. Because if someone owns 9.9% of you, has unlimited funds like the Saudi National Bank, why wouldn't they give you guys more money? And so that's kind of where things got messed up yesterday. But if they're getting saved, it's not bad. Admit your Jim Cramer video is my virgin view of Jim Cramer's show. I broke my... I actually used to watch Cramer before I started doing YouTube. I would like watch Mad Money or like listen to it. That stopped happening. I don't do that anymore. Oh, it's 9:30. Oh, shoot. All right, here we go. March 16, 2023. Thank you all for being here. Let's get into the stock market because the stock market is officially open. I was late today, so I was off on the cowbell, but here we go. Wake your ass up. First Republic Bank down 33%. Again, this one is a tricky one. If you bought this one at 30 or 40 bucks, hoping to get it to go higher, it's a risk that sucks because a lot of people thought they were in the clear, and then this one just falls and gets tanked again. But maybe this is another opportunity to buy, right? This is kind of the scary part of some of these swing trades. Google at 96, and let's go to Meta real quick. The news of TikTok being banned is starting to get more serious. That's why we see Meta inching more towards $200. But I think there's a bill that came out that quite literally said that either you divest from China, you sell your portion of TikTok to the United States, or you are going to be banned. And I think it's becoming a lot more serious than not. Which means if that's the case, where are people going to go? They're going to go to Meta. Coinbase at $64, Ginkgo 13, Goldman Sachs 307, Apple 32, Lucid 738. Lucid just been destroyed since their last earnings. SoFi 533, not bad for SoFi. Amazon 95, Spotify 125, Airbnb 114. Netflix going back up over 300. So it was stuck at 296. Now it's above 300. Bitcoin falling below 25,000, 24,678 right now. Coca-Cola at $60. Let's go to Nvidia. Nvidia, we've got 240. Wow. Nvidia was 234 yesterday. Wow. Nvidia does not care. And on the RSI, it's about 44. Unbelievable. Nvidia does not care. Nvidia's like, we're just going to keep rallying. We're going to keep doing what we have to do. You got to cut the cowbell out. Anyone against the cowbell should quietly leave now. The cowbell's the fun part. Don't worry, Mitt. I did a late night stock talk in your absence last night. Yes, everyone go check out Gabe's channel. There, he was also doing late night stock talk. Then Microsoft say they wanted to process to buy TikTok. Yeah, this is weird because in 2020, I think Trump forced the TikTok sale as well. And like something happened, but I think there was like, because the pandemic was going on, Trump didn't take it that seriously, or like America didn't take that seriously because like we were trying to get the vaccine out. But like, it's crazy, bro, because could you imagine a better time for China to try to swoop into the United States? Literally a global pandemic is happening. You've got all this instability. You've got all this tension in summer of 2020 from a cultural perspective in the United States. And then TikTok's just there. And it's just like, yep, you guys shouldn't worry. You go worry about all that other stuff. We're just going to be here in the background acquiring like 1 trillion new users every single day, acquiring more of your guys' attention and never leaving. TikTok confirms the U.S. has threatened ban if Chinese parent ByteDance doesn't sell stake. So Washington asked TikTok's Chinese parent company ByteDance to divest its stake in the short video form app. That means that they would have to sell it off and presumably sell it off to someone in America. The U.S. has a number of security concerns. The U.S. has a number of security concerns. Where do we go here? Okay, if protecting national security is the objective, divestment doesn't solve the problem. A change in ownership would not impose any new restrictions on data flows or access. This is a spokesperson for TikTok. So they'll look, even if you guys care about security, if we sell our stake, it's not like things are going to be anything different. It's like literally just perception. Now, in one can argue perception is reality. And like America would be like, well, at least we won't feel like you're stealing our data. TikTok is sought to assure U.S. lawmakers that America's user data is safe. In June, it moves all of its user Oracle traffic to Oracle's cloud. Reuters reported in December, TikTok is also giving Oracle the ability to inspect some of the app's code. And that's the thing. Oracle has access to all the data, but that doesn't mean the data doesn't have the ability to go back to China. Or that doesn't mean that Chinese officials don't have the ability to code the algorithm. And we've all heard like the algorithm in China is way more friendlier, right? Showing people stuff that like matters, like math and science and education. And in America, it's showing people doing nonsense. So, I mean, like, ultimately, I kind of agree with the United States on this. The question now becomes, is TikTok going to sell itself off? I don't think TikTok gets banned because I don't think America wants to necessarily ban it. But I do think if they force it to sell off, it would be in a better spot. Time to start buying Meta. I don't know if it's time to start buying Meta yet. It's at 71 on the RSI. Meta's already up more than 100% since its lows. I think you want to wait a little bit on Meta before you officially get deeper into it, especially if TikTok doesn't get banned. I mean, if the news is only that TikTok's getting banned and that's why it's up, then, TikTok doesn't get banned, it'll be fine. Amit, how did we get to the point where taxpayers are paying for Kathy Wood's gambling? Oh my goodness. That's a great comment. I forgot. Yeah, we are technically paying for Roku, and that's Kathy Wood's gambling habits, right? Yeah. Well, what was funny? ARK had its greatest set of inflows yesterday at 300 million. 300 million. Let me see if I can actually pull up that chart. $300 million went into ARK yesterday. Yeah, here we go. $397 million. And so America's algorithm, here's some Andrew Tate and animals video. That's exactly what America's algorithm is on TikTok. That's literally it. They're like, let's show Andrew Tate and show some animals. 397 million on Tuesday alone, the single largest day since April 2021. So what happened yesterday that caused almost $400 million to go into the ARK Innovation Fund, which I think we can all agree by now is just not innovative. And, this is the problem. This is the problem. This doesn't feel innovative. Doesn't feel innovative. It doesn't feel like there's any innovation happening in that fund. Roku, Zoom, Teladoc, doesn't feel like those are the case. So that's the problem. Let's get back into the market as well. Someone says, why is the market so bloody today? Is it that bloody? All right, there is. Look, there's a decent amount of red. Tesla 179. Square, Kathy bought 117,000 shares of Square yesterday. So this is one she's long on. I like Square. I haven't bought it, but I do think Square is, I haven't done enough due diligence. If I was purely not going to do DD and just buy it, I could make the case to just buy it because a lot of smart people I know like Square and I know enough about it to like it. But then my promise to myself I made a year ago was don't buy a stock until you actually know about it because you will sell it so quickly when things go bad, like most people do. And so that's why I just haven't bought it. 11,371 on the NASDAQ. Alibaba's come down. It was 100 at one point over the past month. Let's go to the 3 month. Yeah, it was 121 January. Now it's 80. So that's been a nice little decline. Microsoft 264. Where's the S&P? S&P, I'll say, is 384. 387. Okay, 387 on the S&P. Relatively okay. Again, FRC down $20. Where's Credit Suisse? Let's go to them again. They are up 2.55%, 221. And Palantir. I know you guys saw that video I made yesterday on Palantir where the Jim Cramer saying it's time to sell. I think it was from November or something, but I found it on Twitter the other day and I was like, well, I never saw him say sell. Whenever Jim says sell, I mean, look, that's exactly what we needed at this point. Palantir about $8, $7.99, up 1% right now. I want to go to BuzzFeed and see where they had earnings on Monday. Yeah, this is bad. They're at BuzzFeed is I think this is the wrong one. Where is BuzzFeed? EFD. See the ticker symbol on that. I think they're like 90 cents or something like that. Let's go to BuzzFeed stock. BuzzFeed stock. BuzzFeed stock was flat. Oh, they're $1 too. So BuzzFeed stock was flat because they had earnings that weren't able to really live up to the expectation. Advertising revenue was down, and they're not growing, which makes sense. As an advertising firm and a content company, things are rough in the advertising world right now. So it makes sense that they were down. But I was interested to see how a media company is kind of doing from that perspective. ARKG is the best ARK fund. I agree. I think ARKG is going to be the fund that returns massively if ARK becomes the thing. It would be there. Rogan innovating physical television. Where's the bell? You missed it. The bell was at 9:30. Bell was at 9:30. Where Fubo? I want to go on Fubo. I've seen the stock for a while. Wow, $1.19. It was $3 in February. Goodness gracious. This was a one that was, if you look at the max, this one was there for a while. Fubo has a cult behind it. People don't know they have a cult behind it, but Fubo, there are people that like the stock. And I know this because I researched it pretty heavily and I was getting into it and I was like, oh, people really like this stock. It's like Roku, but it's not as integrated into people's lives as Roku. But people do like the stock a lot. Wow. What about Tattooed Chef? Let's go to that one. How bad is that one today? 1.24. Okay. So we got that one done. Charles Schwab. This is one I've been thinking about again. It was at 81, went down to 58. This is one where I don't know, maybe throw $1,000 at it just for the hell of it and see how it kind of recovers over the next couple months. But again, it's banking is in a little bit of a tough situation right now. We're just you don't know what we're gonna do with banking long term. Fubo, who uses Fubo in here? Yeah, there's not that many people that use it. All right, let's go to Talking Heads and let's see what they have to say today. Okay, let's go from here. Let's hear a little bit about the ban on TikTok and what that would do to some of our American people. Remember, YouTube and Instagram are not allowed in China. So as you know, as much as we love TikTok, it's not the same the other way around. And let's see what it would benefit.
Mahaney, he is Evercore ISI's head of internet research. Mark, it's good to see you. These gains, they're ho hum. Should they be larger?
There should be gains. How large they are is hard to tell. You also had a bump up last week in Snap stock by about 15% on this news. I think the assets that would most benefit from a TikTok ban would be YouTube Shorts and Instagram. Actually, I think Snap may. I know there's a huge amount of demographic overlap between Snap and TikTok, but the use cases are different. Snap is primarily a communications tool, whereas TikTok is much more of an entertainment tool. That's why it's much more akin to Instagram and YouTube Shorts. But it's probably good for these stocks. It's an unfortunate development, but it's good for these stocks.
You know, there's been a lot made of the fact that TikTok today is not what it was even a year ago. Can you give us some numbers around engagement and use of the platform? How much is it down? And is that organic just because people kind of had their fun with it and perhaps are moving on? And if that's the case, are they moving on to YouTube, Reels, and the others?
I don't think there's clear evidence that people have moved away from TikTok. It's just that the growth, which was hyperbolic, is just sort of plateaued in terms of the number of users and the amount of time that people spent with TikTok. But this is, you go back a couple.
And this is true. If you looked at any of their charts, I think they're still like 800 million MAUs, but it is going down and the engagement is going down just because every other app has copied it. So growth has slowed down, and when growth is slowing down, it's hard to then justify to keep growing.
Couple of years, about 3 years, and you saw that people were spending about the same amount of time on TikTok as on Facebook, roughly 40 minutes per user per day. And then all of a sudden it just gapped up with TikTok and it went to about 80, 90 minutes of usage per day. And then it started plateauing and Facebook continued to rise, but not at that level. So it's really kind of, you had this huge spike and it's plateaued off that spike. And then in the meantime, I think TikTok introduced to the world the concept of short form video, which is highly popular, highly entertaining, and somewhat addictive. And I think what Meta did with Reels is kind of capture that. Snap did the same thing with Spotlight. YouTube did the same thing with YouTube Shorts. And it's actually worked really well for all three platforms. It's boosted engagement across all three platforms. People like short form video.
Yeah. So even as they're fighting and perhaps.
And that's like the main thing that the guy talked about when it comes to short form video. The other thing that's really important is that what TikTok did, and let's go to Metastock right now as well, is not just like he's forgetting that it's not just about consumption habits around short form video. It's about how people actually create content. And if you never created content for short form video, you might not fully get it. But TikTok literally forced every platform to change their algorithm because TikTok said, we're not going to use friends and your kind of, high school social sphere to determine the type of content that comes into your feed. We are going to use algorithmic suggestions based on what you're interested in. And your interests change every other day, right? So the algorithm is constantly updating. That makes the platform stickier, makes it more exciting, makes it more engaging, makes it, your ability to discover new content is just like super strong. And so that really changed Meta. It really changed YouTube. It really changed Instagram. Like everyone had to be like, oh, interesting. So if that's how people consume content, we've got to change. And so the lasting precedence that TikTok is setting on just social media in general has been the biggest change since 2012. And now if it gets banned, all those platforms now have this like pseudo TikTok algorithm that's pretty engaging and pretty sticky without TikTok. And, the revenue growth is just not up as much and ByteDance's value has gone down. So like you could imagine if it goes down, there's going to be a lot of traffic inflowing into Google and Meta products. The question is if it ultimately gets sold off to an American bidder. And that's what we're going to see if it ends up happening. SoFi at 540, Microsoft 264, Alibaba 81. I've seen a lot of use cases with GPT-4 now on Twitter. I mean, people are literally giving it a picture of their fridge. And the thing is, you analyzing what's in the fridge and then telling it what recipes to make with the food that's in the fridge. I mean, this thing is like, it's like kind of crazy what's going on there. Oh, we got Tom in the chat. Tom in the chat. Thank you, Tom, for being here. If you want to hop on, I can send you a link. You can give us your thoughts on the banking crisis. Quarantine Quartet, just a small tip for streaming for us. Buy a SoFi share almost. Thank you, $4.99. Thank you, man. I appreciate that. Sachin, good evening. Thank you for being here as well. Okay, Daily Cowbell. Now, the thing is, on Daily Cowbell, Vitaly is incredibly busy with filming a show. This is what we were thinking for Cowbell, okay? What we were thinking is, what if we just do it live every day? Like every day at night, what if we just go live for 30 minutes and do the show? It's not the same produced show the way it would be, but the schedules that both of us have, it's like, it's almost, I mean, this is why me and Tom had to stop doing it, right? Like it was, Tom's schedule is just insane. Same thing with me and Vitaly. It's just really hard to get a edited show produced every single day, not only from an editing standpoint, because the editing takes almost 4 hours. Like the editing takes a long time. And then me and Vitaly actually sitting there and doing it. So we were like, what if we could just go live every night? It's not going to be edited, but it's still going to be a fun show because it's me and Vitaly at the end of the day. And so that's what we're thinking of doing. So I wouldn't say Daily Cowbell is dead yet. It's just time is really hard to do it every single day on his schedule and my schedule, right? But going live every night, that's actually not as hard. And that's what we're thinking of doing. But like he's filming this whole week. So like it's also hard for him to like come home every night and do it. He's like a cinematographer. That's what he likes to call himself. I like to call him a video guy, but you know. So that's what we're thinking. End phase at 200. This is, speaking of Vitaly, this is one of his darling stocks. Let's see if we can finally get end phase under 200. I told Vitaly if it gets like 198, 195, I will buy end phase. But we're not there yet. So let's see if we can get there on end phase. Going live stream is easier. Save the time editing. Yeah, that's what I think as well. Just go live doesn't need to be scripted. See, that's what I was thinking. I'm happy you guys are saying that because Amit doing a live show unedited with a guest would be awesome for Daily Cowbell. Yeah, and we can get a ton more guests if we go live. That's what I was thinking. I'm happy you guys are saying that because it's literally like at this point, it's just really hard to do it every single day and have this beautifully edited show. Like it's tough doing it like that. I love Daily Cowbell, Carlos or Chris. Yeah, and then Tom can hop on anytime he wants, right? If we're doing it live, he can just pop in on the show. So that could happen. Tanner's going to eat his words on how wrong he was about FRC. You can't fake math. Chris, I think we're going to get Tanner on our late night show tonight. And so we can talk to Tanner about this. FRC down 28%, now at $22. Yeah, this one was a tough one, man. If you bought it at 30, 40 bucks, hoping it was just going to go back to 50, 60. And again, it went from 17 to 50 in a day. So people were up 3x on this in a day. And now it has pretty much gone down right back to normal. And a lot of that move from 1750 was pure momentum. It was just like, we got to have it to go straight back up. Needs to be daily junkies. I wish we could do daily junkies. That's just going to be hard because everyone's schedule has to work at that point. Can I get a steak when the cow dies? We're going to keep it up so we don't let it die. Okay, Tom said he's joining. Let me get Tom. So let's get Tom. Tom, I'm sending it on Twitter. Or so send it on WhatsApp. That's easier. Yeah, let me do a WhatsApp. Blah, blah, blah. All right, so we're gonna get Tom's thoughts on what's going on with Credit Suisse. And I thought I used to call it Susie. Credit Susie? It's like no. Actually, Tom, let me send it on Twitter because WhatsApp's being stupid. All right, I'm sending it on Twitter. Okay, sent on Twitter. Oh, WhatsApp loaded. Okay, I'm sending on WhatsApp too if you need it. Oh, I sent you my Twitter link on WhatsApp. If you're not following me on Twitter, definitely follow me on Twitter. Let me put my Twitter link in the chat. We're actually getting close to 10,000 followers on Twitter, so it's kind of cool. I think we're like 50 followers away. So yeah, if you guys want to follow, if you haven't followed yet, I think my banner is the best banner of all time on Twitter. It's the quote from Charles Bukowski, "Go all the way." It's a quote that I hung up behind me as well. So it's a great quote. I like having it there. Kramer on CNBC. Deflation is happening so quickly. Oh my goodness. He sounds like Kathy, who's been screaming about deflation for the past 6 months. That's not happening. Remember Kathy, I made a video September 28th. I remember the day I made it, where Kathy said we will have deflation within the next 6 months. October, November, December, January, February, March. It is March, and we are at 6% inflation. Like, that's why it's getting hard to trust this woman, bro. It's just like, you can't be wrong that many times. Like you know, and like I'm willing to give your stocks 5 years and all this stuff, but then you don't even hold on to your stocks for 5 years. You just dump them at the bottom too. Like Spotify, she dumped it at $70 when she didn't have to, you know? So, all right, man of the hour. Hello.
Hello, people of the internet and fans of Credit Sussy.
Yeah, your audio is crisp. It's good audio.
Thank you, sir. Thank you. I'm here to tell you a good night story about Credit Sussy.
Okay.
So I want to give you a recap of what Credit Suisse, aka Credit Sussy, has been up to for the past 20 years, and it's going to make your hair stand, bro, on your back. And I know you have a lot of it. So here's what Credit Suisse has been up to for the past 20 years. So they worked with the Nigerian dictator. They laundered money for the Yakuza. They helped the Iranians breach financial sanctions. They participated in a tax evasion scheme in Germany, then another one in the US just 3 years later. Then in Italy, 2 years after that, they got fined for money laundering in the US and Singapore, got into another tax evasion scheme, this time in Europe, forged client signatures to take their money to bet on stocks without client's knowledge. Shout out to Sam Bankman-Fried. They got into a quick corruption scheme in Hong Kong, a bit of corporate espionage after that, some small drug trafficking adventure in Bulgaria, and of course the $5.5 billion loss in Archegos, which led them to lose $7.3 billion in 2022, which is pretty much everything they made in the past 10 years prior to that. So that's the bank that's getting bailed out. I'm not, and I gave you like 70% of the stuff that they did more. I just kind of gave you the executive summary, bro. This is the people who are now getting 50 billion francs to survive. So the question you have to ask yourself with this kind of management, by the way, their previous chairman had to resign because he snuck away from his quarantine because he didn't want to miss a Wimbledon game. And he basically he got caught on Wimbledon when he was supposed to be in quarantine. There's a whole bunch of stories, but the question is: so now the National Bank of Switzerland, which it in itself lost 140 billion last year, is now giving money to the bank that lost 7 million. Literally, the blind leading the blind. But the question:
why are they doing that? What's the logic here?
Too important. They're too big to fail for the European banking sector. But you want like a serious answer? Look. Here's the serious answer. Okay, so the serious answer here is this is how a bank run should be handled. Now, I'll talk about the fallacy of this argument in a second. But basically, look, the Europeans had this happen for one day. They didn't start a post-collapse bailout. They gave this guy a loan so they can, stay liquid and stabilize the markets within 24 hours. And obviously, look, I get it, right? Free markets and all that jazz, right? But banks in general, especially big banks like Credit Suisse, who have like 600 billion in deposits, that's 3 times bigger than SVB. They fill a pretty important role in society, so you can't just let it fucking evaporate. So it's kind of the best of all the worst options. And as much as I fucking hate bankers, and I do, believe me, the reality is that banks provide a critical function. And I'm not saying that this is a good thing. It's simply the somewhat less worse option than to let them fall. So the real question for the audience here and for you and for me, because we don't know, is what's next. So you just wrote a blank check, 50 billion francs to Credit Suisse, which was criminally mismanaged for years and did every mistake in the book. In some cases, they fucking wrote a new book about to make mistakes. And so I'm going to say it right here. Unless the Swiss government cleans house inside the bank through possibly kind of a sale of Credit Suisse to UBS, much like HSBC bought up Silicon Valley Bank UK with the support of the UK government, unfortunately, in all likelihood, Credit Suisse will probably piss away this 50 billion in 5 years, and we're going to be back in the same spot we are right now. So not sure how excited UBS is to buy this dumpster fire of a bank, but with support from the Swiss government and some guarantees, they might go for it. But that's kind of my 2 cents about it.
Wow. Yeah, it's interesting. I mean, I always thought Credit Suisse was not a proper bank, but I didn't know this Nigerian
Swiss people hate it, by the way.
Swiss people hate it.
Yes, Credit Suisse has been around for over 150 years, but it's been a bad bank for years. Every Swiss friend I have hates this bank like it was fucking Darth Vader, bro, from Star Wars. Some of these guys who hate it actually employees at the same bank. It's the worst bank in Switzerland. It's the second biggest, but it's absolutely it's evil. The Swiss people are done with it. They're fed up with this nonsense. Now, to play devil's advocate here a second before I gotta run, this ain't the first time that the Swiss government is doing it. In 2008, UBS was kind of in the position of Credit Suisse, mismanaged, not on this level, but they got a $60 billion bailout in 2008. But UBS took that money and flipped everything around. They completely cleaned house. They cleaned up their act. But will Credit Suisse be able to do it? I think they're too far gone to the dark.
And when you mean bailout, you don't just mean depositors of UBS. You mean equity holders in UBS.
No, it's a credit line. They got a credit. They did what the government did for First Republic. So in order not to let First Republic collapse and have another fucking PR nightmare, so they extend the line of credit. They're keeping. Imagine like keeping somebody who's dead artificially alive on life support. That's what's going on. So that's kind of my 2 cents about it. I gotta run. I think the stream is amazing. Keep doing what you're doing. I'd love to jump on the live Daily Cowbell. I think you guys should do it.
Yeah, we're gonna have you on soon. We're gonna start.
I'm excited to see it happen, and you guys keep killing it. Okay.
All right. Thanks for the thoughts, Tom. Appreciate it.
Hugs and kisses.
All right. We got the next guy, Chris. Chris, what's going on with FRC and these banks? It seems like you were right on this one.
Dude, you can't mess with math. Like once you do the math, it doesn't add up. Like even right now with the Fed coming in and saying, hey, we'll backstop it. All it does is just protect depositors. It doesn't protect the share price at all. So a lot of people were jumping into this thing hoping that, oh, there's going to be capital appreciation on the shares.
You were thinking of buying some corporate debt on it, right?
Yeah, but I decided not to because I don't know how they would structure this, whether it's going to be a buyout or a merger or something. So basically, if you guys ever invest in bonds, bonds have something called a covenant. These covenants protect people who lend them money. So essentially, the covenant that I typically look at is the change of control covenant, which means that let's say a company gets bought out by another company, automatically all the debt becomes due at the same time. So basically all the debt that FRC had to its bondholders in its corporate debt would become immediately payable for the par value. So if the bond is trading at right now like 60 cents on the dollar, and let's say JP Morgan buys them up, that means that right away you would get paid based on par. So you get $100. So imagine buying something for $60 today and then getting $100 in a week once the deal is announced. The problem is I don't know what kind of terms JP Morgan's going to offer. And at the same time, I don't know if even JP Morgan would want to buy them, considering that a lot of the stuff that they have is actually pretty toxic.
So do you think there's a bank run happening on FRC right now, and that's why the stock is going down? Like, I mean, if the bank is stable, then why is the stock imploding?
Well, you have to remember this. Number one, with all those assets, quote unquote, all they are just mortgage-backed securities that are yielding literally like less than 2% or 3%. It's very low. And when I was looking at it, someone posted, I have to look at their 10K a little bit more, but most of those bonds are like 15% plus maturity, right? So that's crazy. Like when you lend out that kind of money at very low interest rate, you need to protect yourself with hedges. There's no way that another company is gonna want to deal with that. Literally, you'd want those assets for like so cheap. It just it makes no sense whatsoever. So yeah, depositors are definitely pulling their money. This whole talk on a SoFi Weekly where it's like, oh yeah, everyone is getting away from Silicon Valley Bank and they're bringing their money to First Republic. No one's doing. I mean, only stupid people are doing that. Like, why would you go from one burning house to another burning house? That's just dumb. You know?
Well, you know, Silicon Valley Bank, they have a new CEO. They're back open for business. And there was a bunch of startups on Twitter yesterday saying that They tried to go to a big bank. They realized how much it sucked, and they're going back to Silicon Valley Bank because of how good the experience was with Silicon Valley Bank, even though they failed.
I mean, look, man, whatever small perks that you get as the CEO for having your money at Silicon Valley Bank means absolutely dog shit if you can't access your money, right? Eventually, if something happens, you got a problem, hey, you know, it's just prudent. It's prudent financial management of your company's future. What, they give you an extra latte when you walk in through the door? I mean, some of these banks, one of the things that gives they basically cater to super rich people too, right?
Yeah.
Like if you look at First Republic is not like for your average Joe with $5,000-6,000 in his bank account wanting to just have a little bit of money there. You're talking about people that are like in the hundreds of millions, if not billions of dollars, putting their money in banks like that.
It is in San
Right?
Francisco.
Yeah, because I mean, you know what it is? It's white glove service. That's what you get with some of these banks, where they'll do everything for you. They'll if you ask nice enough, they'll probably even like fly you out places and all this other stuff. So that's just how rich people are sometimes. But at the end of the day, um, I'm not so sure what happens to some of these guys. FRC is probably definitely getting hit with some bank runs, but the biggest thing is that downgrade on their debt. That's probably what makes it worse. Like when you go in junk bond status, that's really bad, you know.
Yeah.
So yeah, I think they were actually halted a couple of times this morning too.
Yeah. Yeah.
Yeah.
All right. Well, I guess we'll talk more about it tonight with Tanner on our show.
Yeah, I think what's going to be interesting is if this recession really does come and it hits us, that means that speculative companies, like I said, like SoFi, are going to have a real tough time because those delinquencies are going to be right in the face of right in the face of people. Basically, right now, imagine people not paying back on their loans. Like, yeah, SoFi right now has gotten away with it because the economy's been good. But you saw the jobs number today. Job numbers came lower than expected, right?
Yeah, which is
And
good for the Fed. Yeah.
and it's just depending on the Fed right now too, like what the Fed is going to do. But SoFi, like I said, I just would watch those delinquencies. Auto delinquencies are on the rise among higher credit score people. So what makes you think that personal loans won't be next? You know?
Yeah.
So
Okay.
yeah, man. So yeah,
Makes
we'll
sense.
talk about it with Tanner. But yeah, let's see what happens with the market. I do want to say one thing before I go. I think we might have hit a theoretical bottom.
Because of Tom Lee, our boy.
Well, not because of him, but basically I'm looking at data that's telling me deflation is like heavily coming. There's no way around it. Like you're seeing
What data are you looking at that Kathy had in September? Because Kathy said in September it's coming in 6 months. It's 6 months later. It's
I
not
don't know
here.
what data she's looking at because she called it wrong the entire time. What I'm seeing is generally you can see a lot of stuff like commodity prices. Look at commodity prices from last year compared to this year, right? Look at prices like soy, like corn, like pork bellies, all those things that are staple foods. They end up, you know, running right into CPI. All of them are down. Look at the price of oil. Look at the price of natural gas. Everything has come down significantly. Shipping costs are down, right? When you add all of those things together, you have to be careful. I know that Gabe is like it makes him mad. Well, Gabe, I'm sorry your puts won't pay off, but the truth is the truth, man.
Yeah, bro. If we are, and so are you? How much cash do you have then?
Believe it or not, I don't have any cash right now. I'm fully invested.
Really? You're fully in.
Yeah, the only cash position I have is with some of my wife's like retirement stuff because she's moved another job. So we're like we're moving her 401 into like an IRA. But other than that, we don't have any cash right now. Where I'm fully invested. I think that we see a Fed pivot sooner rather than later, primarily because of this banking crisis, and also the numbers will finally justify the slowdown in rates. So the deceleration is definitely going to take hold, and then the Fed is going to be like, well, we're going to be a lot more cautious with raising rates because we don't want more systemic bank failures. I mean, imagine right now the Fed is literally jumping back in, saying, "Hey, we're going to cover all the depositors." They're about to inject $2 trillion of liquidity into the market, which is,
What do you mean they're about to inject 2 trillion?
well, they're basically covering everything, right? They're basically giving
Mhm.
out the candy for free again, saying, "Hey, we'll cover you, cover this, cover that." So they're going to be printing money and buying up debt. I mean, well, buying up those assets from these other guys. So, like I said, I'm at the point where I think the Fed is gonna blink, and when they do blink, I'll be there to ride the upside.
And so when you mean you're fully invested, can you name like the 5 or 6 stocks you're fully invested in?
Yeah,
Like what
so
is it?
I have a shit ton of Amazon right now, mainly because of their business. They're changing around. My meta position, which is always good. I
Yeah.
have a ton of Google, right? I have Weight Watchers, which is like a side small bet based on my GLP-1. I have Eli Lilly. I've got Novo Nordisk, and I just bought a semiconductor company, but it doesn't work directly with semiconductors. Remember, I put it on our group chat, the Super Micro.
Yeah.
So I bought Super Micro, which is an AI play. They don't do AI chips, but they make a lot of the products for the data centers, like the server chassis and blades that you need. So I spoke to a few friends of mine, and they're like, "Yeah, like data center growth is just exponentially growing. These guys are at the top of their game when it comes to heat management, with pricing, like total cost of ownership, with modularity." I did a little research on it. PE's trading at like an 8. Their growth rate is crazy. They're doing very well run company. So yeah, I bought about 1,200 1,200 shares of Super Micro. Yeah.
They're asking about Palantir. You've got none of that.
No, I don't have Palantir except for my wife who's been DCAing into it. God bless her soul. Um, but for the most part, I'm actually considering getting back into Palantir. I think the turnaround is definitely there now. So yeah, I actually am probably considering getting back into Palantir. But once again, it'll probably be like a dollar cost averaging position.
So
It's definitely not the value play that some people are making it out to be, because their growth has slowed down so significantly. Until there's any sort of receleration in their growth, it's not necessarily the turnaround that you would want. Whereas Google, Amazon, Meta, they were all value plays because they're still generating a ton of cash flow that they can deploy to share buybacks, right? And their stock prices have come down significantly from their overvalued levels earlier last year. So
I was gonna say basically your portfolio is a little bit of a risky play on some science that you know about, like Weight Watchers and AI play, and then a ton of big tech. And
yeah,
that's
yeah,
kind
and
of
I also have bonds too, right? So I
a
have a
bond.
bond portfolio also of some Royal Caribbean. I've got some other bonds that I have, but that's like my private, like just on the side stuff, which I don't like talking about bonds because bonds are like just not retail friendly. So I don't really talk about that.
Gabe says he's shorting Meta and he's telling you to get out of the position.
Yeah, I'm all right. I'm all right. I am gonna probably sell some calls against my short call. Well, so basically what I have is I have a bunch of $150 strike meta calls that expire in 2025. I'm probably gonna sell the $200 or maybe the 225 um call on Meta against my other one. So it'll create something called a spread. And basically it means I'm cashing out on my gains, but at the same time I'm still doing well on it. So if it goes down, it'll eat into the 225, but it won't eat into my 150s. And my 150s will end up, yeah, you just have to, I don't know how else to explain it. It's
Okay, last question is why don't you have any Tesla? I mean, we know you
Oh, I
definitely
have Tesla too. Sorry, I forgot
yep,
about
okay.
Tesla. I have about 10 calls on Tesla, which I have actually hedged a little bit when it jumped up to like 200. So I sold some calls against I sold some calls against my calls. So basically I have two different strikes. So I have a $150 strike call to 2025, and then I once it appreciated, I ended up selling $200 strike calls on the other side. So this way I got the premium from that. You know.
Gotcha.
Yeah.
All right, cool stuff. I'll see you tonight on our show. Thank you all 250 people for being here. That's it for the market open. And yeah, thank you for letting us know everything going on with the banking crisis and what you're doing with your portfolio.
Oh, one last company, and I know Sachin is going to remember this. I still got Epsilera, Sachin, and I've been adding to it meaningfully. That is one company that I think in 5, maybe 10 years, everyone's just going to be like, holy shit, was a 10 bagger, a 20 bagger, even maybe 100.
What's the ticker symbol on that? ABCL?
Yep.
And what's your average on it?
Right now it's probably like 5. No, it's probably because I sold some covers on it.
This is a
I think
biotech
maybe
play.
like
It's a drug play.
between 7 and 10, something like that.
Is this a psychedelics play?
No,
Or-
no. That's different. This is a antibody.
Okay.
So it's a CRO company that does antibodies. But they're, like I said, they're very well run, very well capitalized. They've got 900 million in the bank. They've got partnerships with every major pharmaceutical company.
But is it like if the FDA doesn't approve of them, they fail? Is it like a
No.
binary type of?
So what's good is that they don't do all of that part. They just do the initial research for the pharmaceutical companies, get it to a point where the pharmaceutical companies can take it to market. So they're very diversified in their what is that thing called? In their business approach. So yeah, unlike other pharmaceutical companies where they run the risk of investing all of their dollars into one molecule, and if that molecule fails, the company goes bankrupt. These guys are more along the lines of partnering with other pharmaceutical companies to do the early stage research that you need to get an antibody out, that then the business can do like clinical trials and all this other stuff, and they end up getting royalties for it. So the best example that I could give is something like what is that thing called, like a manager of like a rapper. Yeah, not a manager of a rapper, but like a recording label of a rapper, right? Where basically the rapper sings and all this other stuff, and
They're the A&R, the management, the marketing.
yeah, and they get a cut of it because they're the ones that develop the talent and everything, but they don't have to do any physical work. So like I said, they have a very diversified portfolio of companies that they work with. They work with almost every major company that you can think of. They were the first ones to come up with an effective antibody against COVID, and they also did that with the second antibody. So bamlanimab, and the other one was bebtelovimab, and they got nice like royalties from that. So I got almost like $500 million in royalties from just those. So yeah.
Okay. We'll look a little bit more into it. Thank you, Chris, for joining us. Appreciate it.
Yeah.
I'll see you tonight.
Yep. See you tonight. Have a good one, guys.
Yep. Bye. Vincent says, I bought 2 mesh squishy ball for my wife for her to distress from work. This fidget spinner work. Yeah, fidget spinner is like when you're just talking and you're just running it, totally de-stresses. It's actually it's really good. So it works. All right, guys. Thank you for being here. I appreciate it. Thanks for Tom and Chris for being on. Wow, my camera dies right when that happens. Let me switch to the bad camera here. Thank you, guys. I'll see you later throughout the day. And again, tomorrow on the Market Open and tonight with Chris on our podcast. Everyone have a great day. Bye-bye. Follow on Twitter. It's in the description. All right.